What if I told you that everything you were taught about money is already outdated, and by 2026, it could quietly make you poor? This video is not motivation, it's a financial wake-up call. While most people are working harder, saving more, and still falling behind, a small group of smart investors are using hidden money systems, AI, and elite strategies to stay ahead without working more hours. In the next few minutes, I'll reveal how money really moves in the modern world, why traditional jobs and savings are becoming dangerous, and what the smartest investors are doing right now to protect and multiply their wealth before the next financial shift hits. If you care about your future, your freedom, and not being left behind, watch this till the end, because one idea in this video could completely change how you see money forever. If your income stopped today, how long would your money survive? 30 days? 60 days? Or zero? Because here's the truth no one tells you. 2026 will not reward hard workers. It will reward smart investors. The old rules of money are collapsing. Savings are shrinking. Jobs are unstable. AI is replacing skills faster than people can learn new ones. And the scariest part, most people won't realize what happened until it's already too late. But if you stay with me for the next few minutes, you will never look at money the same way again. Study hard. Get a job. Save money. Retire peacefully. That formula is dead. In 2026, money moves faster than people. Technology moves faster than governments. And information moves faster than truth. The smart investor of 2026 is not rich because of luck. They are rich because they understand systems. And today, I will show you those systems. Most people think the future of money is complicated, but the truth is it's becoming brutally simple. Those who understand leverage will rise, and those who depend only on effort will struggle. Look around you and notice how quietly the shift is happening. Shops without cashiers, businesses without offices, creators earning more than CEOs, algorithms deciding what you see, buy, and believe. This is not random, this is the new financial architecture being built in real time. The smart investor in 2026 understands that value is no longer locked inside factories or buildings, it lives inside networks, software, data, attention, and speed. Money no longer rewards who works the longest hours, it rewards who positions themselves closest to growth. Think about how platforms work, millions contribute, but only a few own the rails. That's not unfair, it's structural, and once you see it, you stop blaming the world and start redesigning your role inside it. The average person asks, how do I earn more? While the smart investor asks, what system can I plug into where my effort compounds instead of resets? Compounding is not just about interest, it's about knowledge, reach, reputation, and ownership stacking over time. Every year you delay learning how money truly works, the gap widens silently. AI accelerates this gap because it multiplies decision-making power. One smart investor with the right tools can now outperform entire teams from the past. This doesn't mean humans are obsolete, it means average thinking is. In 2026, value will flow to those who can think strategically, adapt quickly, and act decisively while others wait for permission or certainty. The elite don't wait for perfect clarity, they move with informed conviction and adjust fast. They understand that risk is not volatility. Risk is being stuck in a system you don't control. They diversify not just assets, but income streams, skills, and optionality. Optionality is power, the ability to pivot when the environment changes, and the future belongs to those who have it. Look at how quickly trends rise and fall, how entire industries transform in months, how attention shifts overnight. Stability no longer comes from one job or one plan. It comes from flexibility and ownership. Smart investors build portfolios that include digital exposure, real-world value, and personal leverage. They invest in learning how markets behave, how psychology drives bubbles and crashes, how narratives move money faster than fundamentals in the short term, and how fundamentals always matter in the long term. They don't panic during uncertainty. They prepare during calm periods. While others scroll for entertainment, they scroll for signals. While others fear automation, they automate themselves. While others argue about the future, they quietly build positions inside it. They understand that money follows confidence backed by competence, not hope backed by noise. The future will reward creators who think like investors and investors who understand culture, technology, and timing. Your mindset determines whether AI becomes a threat or a multiplier in your life. Used correctly, it reduces friction, enhances insight, and frees time for higher level thinking. Used blindly, it replaces you. The smart investor doesn't compete with machines on speed. They compete on judgment, ethics, and vision. They know when to move and when to wait, when to scale and when to protect. They understand that wealth is not loud. It's quiet and intentional, built long before it becomes visible. Every major financial shift creates fear first and opportunity second, and by the time opportunity feels safe, it's usually expensive. The people who win are rarely the loudest or the earliest cheerleaders. They are the prepared observers who act before the crowd understands what's happening. This era will create new winners from unexpected places, not because they were born rich, but because they learned how to think differently about money, time, and risk. If you feel a sense of pressure, that's not panic, that's awareness. Awareness is the first step toward control. Once you stop seeing money as something you chase and start seeing it as something you design systems around, your behavior changes. You spend differently, learn differently, choose differently. You stop trading time for short-term comfort and start trading comfort for long-term freedom. The smart investor in 2026 is not obsessed with luxury, they are obsessed with independence. Independence of thought, income, and choice. They don't wait for governments, employers, or trends to save them. They build resilience into their financial lives so external shocks don't break them. They understand cycles, they respect risk, and they play the long game in a short attention world, knowing that patience combined with strategy is rare and therefore powerful. They also understand that money is emotional before it is logical, and that most financial mistakes are not made because people lack information, but because they lack control over fear, ego, and impatience. Markets rise and fall, headlines scream urgency, social media amplifies extremes, yet the smart investor trains themselves to operate calmly inside chaos. They know that every boom creates blind optimism and every crash creates blind fear, and both states are dangerous if you follow the crowd. Instead of reacting, they zoom out. Instead of chasing trends, they study cycles. Instead of copying others, they build frameworks that guide decisions even when emotions are high. This is why two people can see the same opportunity and have completely different outcomes. One acts with a plan, the other with excitement. Planning doesn't remove risk, but it removes regret. In the coming years, financial literacy will matter more than formal education because degrees teach subjects, but literacy teaches survival. Understanding cash flow, leverage, risk management, and opportunity cost will separate those who drift from those who direct their lives. The smart investor becomes fluent in the language of money, because money responds to clarity. They know where their income comes from, where it goes, how it grows, and how it is protected. They don't rely on one source of truth. They check information, question incentives, and look beyond surface-level narratives. When everyone is distracted by short-term noise, they focus on long-term signals like demographic shifts, technological adoption, capital movement, and behavioral change. They recognize that attention itself has become a currency, and those who can attract, hold, or direct attention hold power. That's why platforms, creators, and ecosystems matter more than individual products. A smart investor doesn't just invest in what exists today, they invest in what people will need tomorrow. They ask uncomfortable questions early, such as what happens if their industry disappears, their skill becomes automated, or their currency loses purchasing power. These questions are not pessimistic, they are strategic. Preparing for disruption is not fear-based thinking, it's future-based thinking. The smart investor builds redundancy into their life so one failure doesn't collapse everything. They respect the fragility of modern systems while positioning themselves to benefit from their efficiency. They understand that speed is an advantage, but resilience is survival. When something breaks, those with options move first. Options come from diversified income, adaptable skills, liquid capital, and strong networks. Networks, especially, are underestimated. Who you know often determines what you know before the rest of the world does. Information asymmetry creates opportunity, and opportunity compounds when acted on early. This is why the smart investor is always learning, not obsessively, but intentionally. They don't consume information to feel busy, they consume it to make better decisions. They filter aggressively, knowing that clarity is more valuable than volume. In a world overflowing with advice, they trust principles over predictions. Predictions change, principles endure. They understand that no asset rises forever, no system remains dominant forever, and no advantage lasts without adaptation. That's why they are not loyal to assets, they are loyal to logic. When logic changes, they change. Pride doesn't protect capital, humility does. They are willing to admit when they are wrong quickly, because small losses preserve the ability to win big later. Ego is expensive in the market, and impatience is even more costly. The smart investor treats time as an ally, not an enemy. They allow good decisions to mature instead of forcing fast outcomes. They know that boredom often precedes breakthroughs, because real wealth is built quietly while attention is elsewhere. While others seek constant excitement, they embrace consistency. They show up repeatedly, refine their approach, and let compounding do its work. Compounding, after all, is not dramatic in the beginning, it's invisible. That's why most people quit before it becomes powerful. The smart investor understands this psychological trap and stays the course. They design their environment to support discipline, automated investments, clear rules, predefined limits so they don't rely on willpower alone. They reduce friction for good habits and increase friction for bad ones. This is systems thinking applied to personal finance. Over time, these systems create momentum, and momentum creates confidence. Confidence then attracts more opportunities, partnerships, and capital. This is how wealth accelerates without appearing rushed. The future will not be kind to those who drift without direction, but it will be generous to those who move with intention. As economies digitize and borders blur, opportunities will no longer be limited by geography, only by mindset and execution. The smart investor sees the world as a connected marketplace, not a fixed hierarchy. They are not intimidated by scale, because technology has lowered entry barriers, but they are respectful of competition because everyone has access to similar tools. What separates outcomes is not access, it's application. Knowing something is not the same as doing something, and doing something once is not the same as doing it consistently. This is where most people fall short. They wait for confidence before action, but confidence comes from action. The smart investor acts small, learns fast, and scales smart. They don't need to be right all the time, they just need to be right enough, often enough, with controlled downside. Over years, this approach compounds into freedom. Freedom to choose how to spend time, who to work with, and what problems to solve. And ultimately is what money is for, not status, not validation, but choice. Choice in a world where choices are quietly being taken away from those who don't prepare. As this landscape continues to evolve, the smart investor becomes increasingly aware that the most valuable asset they own is not money itself but perception, the ability to see reality before it becomes obvious. Perception allows them to recognize weak signals early, to sense when narratives are shifting, and to understand when optimism is excessive or fear is misplaced. They realize that markets are not driven purely by numbers, but by human behavior amplified by technology, and that understanding psychology gives them an edge that spreadsheets alone cannot. This is why they study history, not to predict exact outcomes, but to recognize patterns of excess, correction, innovation, and renewal. Every generation believes its moment is unique, yet the emotions remain the same: greed at the top, fear at the bottom, denial in between. The smart investor trains themselves to step outside these emotional waves and act when others are frozen. They accept uncertainty as the price of opportunity and stop demanding guarantees from a world that never offers them. Instead of asking for certainty, they ask for probabilities and design their actions around favorable odds. This probabilistic thinking frees them from perfectionism and allows progress to replace paralysis. They understand that waiting for the perfect moment often means missing the moment entirely. As capital becomes more mobile and opportunities more global, they pay attention to where talent is flowing, where innovation clusters are forming, and where regulations are loosening or tightening. They don't ignore policy, but they don't depend on it either. They assume rules will change and build adaptability into their plans. In this way, they remain light on their feet, capable of shifting strategies without emotional attachment. They also recognize that trust is becoming a scarce currency in an age of misinformation, and those who can build credibility will command outsized influence. This is why reputation, transparency, and consistency matter more than ever. A strong reputation opens doors that money alone cannot, and the smart investor protects it fiercely. They know that shortcuts may offer quick wins but often destroy long-term leverage. Patience, integrity, and clarity become competitive advantages in a noisy world. As automation handles repetitive tasks, human judgment, creativity, and ethical decision-making rise in value, and the smart investor invests in sharpening these qualities within themselves. They allocate time not just to earning or investing, but to thinking deep, uninterrupted thinking that allows insight to surface. This kind of thinking is rare because it requires discipline in a distracted world, yet it is precisely what leads to original strategies rather than copied ones. The smart investor avoids the trap of comparison, understanding that everyone is playing a different game with different constraints, timelines, and goals. They define success on their own terms, aligning financial decisions with personal values to avoid building a life that looks impressive but feels empty. This alignment creates resilience, because when markets fluctuate or plans change, their sense of direction remains intact. They're not shaken by temporary setbacks because they see them as feedback, not failure. Each mistake becomes data, each loss a lesson, each delay an opportunity to refine. Over time, this learning loop compounds just as powerfully as capital itself. They also appreciate that collaboration often accelerates progress more than competition, and they seek partnerships where incentives are aligned and skills are complementary. In the future economy, lone geniuses will be rare, coordinated teams and ecosystems will dominate. The smart investor positions themselves within these ecosystems, contributing value and sharing in collective growth. They understand that giving value precedes receiving value, and they build goodwill long before they need it. This long-term orientation allows them to move calmly while others rush, to listen while others shout, and to act decisively when clarity emerges. As financial tools become more accessible, discipline becomes the true differentiator. Anyone can open an account, buy an asset, or follow a trend, but few can stick to a strategy when emotions intensify. The smart investor prepares for this by rehearsing scenarios in advance, knowing how they will respond to volatility before it happens. This preparation turns chaos into a familiar environment rather than a shock. They also remain aware that success can be as dangerous as failure if it breeds complacency. Growth demands constant reassessment, and the smart investor periodically challenges their own assumptions to avoid stagnation. They welcome dissenting views not to be contrarian for its own sake, but to test the strength of their thinking. In doing so, they avoid echo chambers and remain open to evolution. As the pace of change accelerates, they prioritize learning how to learn, adapting their mental models as new information emerges. This meta skill ensures relevance even as specific skills become obsolete. They are comfortable being beginners again, knowing that humility today can lead to mastery tomorrow. This willingness to start over differentiates those who endure from those who fade. Over years, these behaviors accumulate quietly, shaping outcomes that appear sudden to outsiders, but were built patiently beneath the surface. The smart investor does not announce their moves or seek validation. They let results speak in time. They understand that the future is not something to predict, but something to prepare for, and preparation is an active, ongoing process rather than a one-time decision. As long as change continues, and it always will, they remain engaged, curious, and intentional, adjusting their sails rather than cursing the wind, and staying alert to the subtle shifts that signal where value will flow next. The truth is, the future will not ask you if you are ready, it will simply arrive, and it will reward those who prepared in silence. Money in 2026 will not belong to the loud, the lucky, or the busy. It will belong to those who learn to think clearly, act strategically, and build systems instead of chasing outcomes. Every decision you make from this moment forward is a vote for the life you will live 5 or 10 years from now. You can choose comfort, familiarity, and delay, or you can choose awareness, ownership, and direction. The gap between those two choices is where financial freedom is created or lost. Remember, this wealth is not about how much you earn, but how well you position yourself in a changing world. If you master your mindset, respect time, and move with intention, money becomes a tool instead of a trap. The era of the smart investor is not coming, it is already here, and the only question left is whether you will watch it happen or step into it and claim your place.